What do you believe Cathie Wood's opinions, at least going forward, are about Tesla stock? Renowned investor Cathie Wood has long been recognized as a fervent supporter of Tesla. Yet, investors closely follow Cathie Wood's forecast for the top EV firm stock. You wouldn't want to overlook this information. Before a severe sell-off in 2022 erased ARK's gains, Cathie Wood, an investor in disruptive innovation-focused firms, made millions during the early stages of the pandemic amid the spike in Tesla and other favorites. ARK's fifth largest holding, with approximately $487 million, is Tesla, the majority of which is in its flagship ETF, which has added over 300,000 shares of the company to its holdings in the previous month. The market as a whole was negatively impacted by an unfavorable macroeconomic climate and higher interest rates, but Musk's acquisition of Twitter and subsequent commitment to the social media company to the dismay of Wall Street largely coincided with Tesla's downturn. Despite the decline, Wood has remained optimistic. Last month, he predicted that Tesla shares will climb by more than tenfold to $1,500 by 2027. Even though Tesla is undoubtedly dealing with a lot of problems right now, Cathie Wood believes that the company stock still has potential and might reach $1,500 in the next 5 years. She mentioned price reductions on Tesla's models in an interview with Barron, saying, "I think there are people who don't buy his cars now. However, many people will use economics as their guide if he follows through on what we believe he will accomplish cost-wise. And I believe that number is much higher than that of the Twitter naysayers." Wood claims that the rise in their projected price objective can be attributed to three factors. The first was the market's introduction of Tesla killers. As a result, Wood and her company, ARK Invest, anticipate that Tesla's market share will drop from 17% to something less on a global scale, including in China. Instead, it increased to 18% for electric cars. So what we're finding, according to Wood, is that Tesla is simply miles ahead of the competition. I'm talking about the Mercedes and BMWs in terms of range and other crucial electric car parameters. In terms of cost reductions, she continued, Tesla's battery costs are 3 to 4 years ahead of those of any other automaker. Therefore, all other automakers will have to sell their cars at a loss while simultaneously losing their internal combustion engine business if they hope to compete with Tesla. So there, they have a serious issue. Wood clarified, the majority of other automakers won't be able to match or surpass Tesla's combo unless they want to lose money on the vehicles. Thus, that's critical from both a performance and a range perspective, Cathie Wood said. Wood stated that Tesla has a distinct advantage over other automakers when asked her opinion of the company in 5 years. According to her, Tesla is the best option out of all the automobiles when comparing cars based on power and range rather than brand. Nevertheless, she claimed that despite the fact that well-known automakers like BMW and Volkswagen have made great strides recently, Tesla still outperforms them in terms of power and range. According to Wood, most other automakers will not be able to match or surpass Tesla's combination unless they wish to incur losses on their vehicles. Wood stressed how crucial that is from both a performance and a range perspective. When asked what she thought about big businesses trying to compete with Tesla in the development of electric vehicles, Wood said, "They are failing miserably. It's not the same with branding." Although there is a strong brand loyalty among consumers towards these other automakers, Wood believes that as buyers get more interested in the specifications of electric cars instead of gas-powered ones, they will start to switch. She claimed that while brands alone might still be able to influence them, they won't have as excellent of an electric car as Tesla would. Star investor Cathie Wood responded to ARK Invest Director of Research Autonomous Technology and Robotics Sand's tweet on January 7th by saying that the EV opportunity alone is huge. Kuro stated in the tweet that Tesla should be in a strong position to weather any cyclical slowdown in the auto industry as it has in the past because to its high profit margins, superior drivetrain efficiency, and affordable batteries. The ARK CEO tweeted, "It can be the first to lower prices, which puts pressure on other automakers in response." Cathie Wood stated that Tesla does not require autonomous ride-hailing in order to succeed, citing findings from ARK's research and CFA Tasha Keeney. ARK's research presents a significant possibility, according to Wood, only with Tesla's EV. Removing autonomous driving and any form of ride-hail, which we believe will be more than 60% of Tesla's value over the next 5 years, our 2026 price target would become roughly $500 a share post-split based on EVs alone, more than 4 times the increase from the current price, tweeted Tasha Keeney, Director of Investment Analysis and Institutional Strategies at ARK. It should be mentioned that in the middle of April, ARK Invest released the Tesla value model, an estimated value per share of $4,600 is produced by ARK's updated open-source Tesla model for 2026. But take note that the Tesla model was released before the Tesla's August 3-for-1 stock split. As positive as she's ever been on Tesla, Cathie Wood believes the stock will rise 5-fold in the next 5 years. Indeed, ARK keeps gorging on Tesla stock. In fund manager Cathie Wood's ARK Innovation ETF, Tesla is ranked 3rd behind only Exact Sciences and Zoom Video. Renowned investor Cathie Wood continued to accumulate Tesla shares after making multiple purchases in January, adding to her holdings on January 18th. On January 18th, ARK Funds acquired 49,983 Tesla shares, valued at $6.4 million. This indicates that as of the closing on that day, Wood had purchased 806,663 Tesla shares in January alone, which were valued at $103.9 million as of the close on January 18th. Despite the fact that Tesla's stock has dropped 58% in the past year due to concerns about supply and demand, Wood believes the company will realize significant profits from only electric vehicles. This stock could almost double in value over the next 5 years, she stated in a webcast that CNBC highlighted. Additionally, if you have any faith in driverless vehicles, the number should be closer to 13 during the next 5 years. As a result, our confidence in Tesla is at its highest point ever. $653 would be the current price 5 times and $1,699 $13 times. Wood believes the corporation has made significant global pricing reductions, which is a wise move. She declared Tesla will have very aggressive pricing. Tesla is able to finance this, innovates the most aggressively, and has the lowest cost structure. The other automakers will have to keep up with these price reductions, but it will negatively impact their margin and profitability. But there are still a lot of unanswered questions regarding Musk's Twitter diversion, as some have dubbed his Twitter acquisition, and his contentious comments. Dan Ives, a vociferous opponent of Musk and Wedbush analyst, said to Yahoo Finance, Musk is the only one who can put out this 5-alarm fire on Tesla stock. The Twitter meltdown involving Musk and the current surge in demand are a perfect storm. Tesla CEO Elon Musk recently testified in court as part of a shareholder lawsuit, stating he believed it was ridiculous to assume his tweets' content could affect Tesla's stock price. In support of his argument, Musk cited an instance in which the price of Tesla's shares appeared to increase following his tweet, expressing his opinion that the stock was too expensive. Although casual viewers would interpret that as Musk acknowledging that his tweets have an effect on stock prices, he clarified that a connection could only be made if the price of the stock dropped after he complained it was too high. People may not believe what I tweet or behave appropriately just because I say it, Musk added. The CEO continued by saying he could find no evidence of a connection between his tweets and the price of Tesla's stock. Based only on its EV business, ARK's 2026 price forecast for Tesla shares would be approximately $500 per share, more than 4 times its current valuation. The forecast has been modified to account for the August 25th, 2022 3-for-1 stock